Hi, this is Alessio. Hope you're well. In this video, I want to draw your attention to a chart that a lot of people out there are not even paying attention to. I think it's being ignored by the majority of people out there. And I actually think even the analysts out there who are talking about this chart have got the wrong perspective, have got the wrong opinion. So we should look at this chart and also this particular chart and what they potentially mean, because it could have a major impact on other key markets. For example, precious metals and also other major currencies. And also probably stock markets and maybe Bitcoin as well. All right, guys, join me. All right, guys, welcome back. So which chart are we talking about? Well, I'm actually going to draw your attention to the chart of the US dollar. Now, before you say, oh my God, US dollar, so boring, talk to us about something else. But actually, the thing is, a lot of people actually completely misunderstand the view that the dollar chart is really important. My good friend Charlie Burton has mentioned this. The impact of the US dollar on other key markets, for example, especially I would say precious metals, but also the euro, the pound is very important. So that's why we need to pay attention to what's going on here on the chart of the US dollar. And also the euro, because the euro is just the inverse of the dollar. So here's what I want to talk about in this particular video. And what's going on in my view is that many analysts at the moment have the view that the dollar has reversed trend. Why? Because in their view, well, it's obvious to them, because they're saying, look, the dollar has just broken above the downtrend line and above the 200 SMA. So obviously we're now in an uptrend or reversal. You know, there was a bullish reversal or bull market. Now, certainly that's the view from classical technical analysis. By the way, the same thing has happened, as you can see here on the chart of the euro. The euro chart, let me go on the chart of the euro here. The euro chart, just the exact thing, the opposite. So as you can see, the euro has broken down below its 200 SMA, the green line, and the uptrend line. So you can see why a lot of analysts are saying the euro is now in a downtrend or a bear market, and the euro, I beg your pardon, the dollar, in their view, is now in an uptrend because of the exact opposite. It's broken above a trend line. Now, recently I've been reading the book Physics and Philosophy by the physicist Werner Heisenberg, and you may recognize his name from the Heisenberg uncertainty principle. And in this book, he actually talks about the difference between classical physics and quantum mechanics. So the classical idea of physics and the quantum mechanical view of the world. And I think this applies also in technical analysis. In classical technical analysis, which you get from a lot of textbooks, the idea is, you break a trend line, you go above the 200 SMA, the green line here. That means you're very likely in a bull market. Okay, and the opposite applies in reverse if you break them in, for example, the chart of the euro. So that's why a lot of analysts are saying, because price is broken down below the 200 SMA and the trend line, we're now in a downtrend or a bear market in the euro. However, that's the classical view of technical analysis. And I think things have changed a lot, especially in recent years. It's not as simple as that. Because as you know, as I'm sure you know from your own knowledge, price can also do false breaks. You can see false breaks of trend lines, false breaks of support resistance. Happens a lot these days. My view is that we need to wait for confirmation to see that this is actually correct, whether we are reversing trend or not. I actually think that is not correct, by the way. I don't think we are now in a downtrend in the euro. So I know it sounds a bit crazy right now that I'm saying this, but I do not believe that the euro is in a downtrend. I actually think it's a false break. I want to see confirmation first, just to let you know. Same goes with the dollar. I think the dollar also is not reversing trend, but this is, in my view, is simply an ABC corrective pattern. And I shall explain to you why. First of all, the pattern and the structure we're seeing here, to me, this overextended rally that we're seeing here, in my view, is actually an ABC A wave. As you can see, I've actually labeled this ABC. And I think we're in a final, in my view, I think we're in a final fifth wave, the wave 5, the C wave. That means, by the way, you can see that this red line represents the 100% extension or projection of this A wave. If you measure the A wave, project that from the low, the B wave, the potential B wave, that gives us exactly 100%, which we reached just recently at 104, 105 approximately, is the 100% symmetrical extension for the C wave. Now, could this still go higher? Yeah, it could. But bottom line is, I'm not saying that the C wave of this ABC corrective pattern has topped. We don't have a confirmation just yet. I shall explain to you when I think we'll have confirmation. But I think we need to be careful, because what I think we need to wait for to confirm whether the trend has reversed or not is the next pullback. So rather than just simply saying, yeah, trend has reversed because we've broken above the 200 SMA and the trend line, what I would say is let's wait for the next pullback, because I think a pullback is coming. Why? For one thing, take a look at the chart of the dollar on the weekly. You will see the dollar is overbought on the RSI. So RSI is currently, this is a 2 setting, the short-term setting is nearly 100, quite overbought. You can see whenever it got overbought here, in the past, especially in the recent several months, we did see a pullback here. We saw a pullback here when we got to overbought conditions on the dollar. Okay, so we need to be very careful here. And also, there's another reason from a statistical perspective. How many weeks now have we had green bars? Almost 8 weeks, right? 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks of green bars. The exact opposite is correct with the euro. Yeah, this is the euro chart, and notice that the euro has had 8 weeks red bars. Almost, yeah, that's correct. 8 weeks of red bars. And oversold, just the exact opposite of the dollar, as you'd expect. Oversold conditions. 8 weeks of red bars. So the odds are increasing for some kind of a pullback, given the oversold conditions and red bars for 8 weeks. The odds are increasing for some kind of a green bar or pullback, in my view. Some kind of a bounce. Especially since we're reaching also where we're reaching support at the 50 SMA and the prior lows, almost getting there. So I think we're at a level on the euro. The reason I mention the euro, by the way, is because the inverse of the dollar. Okay, so you need to look at ideally both the euro and the dollar because it gives you a better perspective. The euro is reaching a key support level, the 50 SMA. It's not far away, with oversold conditions and 8 weeks of red bars. So that means statistically we should get a green bar soon in the next few weeks. Not a certainty, but a potential. Okay, probability there. And that's not all. There's another reason why I think we need to pay attention to these charts, because if you look at the chart of the euro, okay, now go on an hourly chart. Okay, let me just show you this. Go on an hourly chart and put on the chart the MACD. As you know from your knowledge of divergences, you know from technical analysis that whenever you see a series, look at this, lower lows, but higher lows on the MACD, okay? Higher low on the MACD, but lower lows in the price, showing to us a potential positive divergence, which is bullish. However, as I'm sure you know, that on its own is not enough. You need a break of resistance. I would say you need at least a break of this prior high, probably 108, to confirm some kind of, maybe here, 10840, 10840, to confirm the divergence and to show to us a bottom in the price. So be careful. I'm not saying that we've bottomed just yet. Just because we have positive divergences, it does not mean the price has bottomed. We need to wait for a break of resistance, and I'll explain that in a few minutes. But there are good signs here that we're potentially reaching a bottom here on the euro. The exact same thing in reverse on the dollar. If you look at the dollar on the daily chart, go on an hourly chart and put the MACD on your chart, and you'll see the same thing in reverse. So again, let me just show you. We've got higher high on the dollar, but look, again, lower highs in the MACD. So again, negative divergence on the dollar chart, on the hourly chart. So again, this is also showing signs of a weakening trend. The trend or the force of the uptrend is weakening on the dollar with this divergences. Again, I need confirmation with a break below support. So just because the divergences are there, just to repeat this point, just because we have divergences, in this case negative divergences, it does not mean the dollar has topped. It could still potentially push higher. All I'm saying is let's wait for a break of support, like break of this support level here at a minimum, at 104, or even this level is better, 103.5, to give us an indication that the top is in for the dollar. So let's come back to this chart here on the daily chart of the dollar. There's one more chart I want to show you here, and that's to do with the euro. Again, remember that the euro is oversold and also reaching near support. And as I mentioned, it's reaching the 50 SMA here, the euro, with oversold conditions. But look at this. This seasonality chart, courtesy of stockcharts.com, for the euro shows that while September can be a negative month, slightly negative, the potential seasonality, the likely seasonality for October and November for the euro is positive. So as you can see here. So we got positive seasonality for the euro coming October to November, especially December. So that's something to bear in mind. The next few months after September could be very positive for the euro. And that supports my view that the euro could be seeing a potential bounce in the coming weeks. Let's go on the chart of the euro first. Again, let me repeat this point. At the present moment, we have no indication that the euro has bottomed, and also no indication that the dollar has topped. Okay, what we need is confirmation. So how can we get confirmation? Firstly, on the euro, I would need to see the euro break above resistance. So where's resistance on the euro? You can see I've pointed out this region. So pay very close attention to this region here. That is between 108.40 to 108.82. So this is the first indication. If the euro can get some nice green bar action here, let's say we can get some nice green bar action here above this region, that would be the first indication that bulls have regained control and that we're potentially seeing a reversal and a bottom. Okay, so I need to see the euro get back above 1.0840. This is the level that the euro needs to get above and close above at a minimum to show to us that bulls have regained control and that potentially we're forming a bottom. But I would need to see further confirmation by a break above 1.0945. Okay, that's the level also has to break for the euro to push us back into a bull market or uptrend continuation. So watch these two levels, 1.0840 and above that 1.0945. If these two levels break in the next few weeks or potentially by October, that could be a very strong sign that we're likely moving into an uptrend or a bull market. By the way, that I think is the most likely scenario. That's what I'm expecting. Nevertheless, I need to see confirmation. Now, here's how we can know if I'm wrong. If I'm wrong on this view, the euro would have to break below support. In other words, the lows of March. If it breaks below that, if it breaks below that, then I'm probably wrong in my bullish analysis of the euro. Okay, so that's all I'm saying. Again, I don't think we're going to break below that level, but it's a possibility or a risk. But what I'm saying is the more likely possibility or probability is that we're probably going to go back above resistance. But I want to see confirmation above 1.084 and 1.088 to show to us a bottom is likely to form in the euro. As far as the dollar is concerned, again, my view is the dollar still remains in a downtrend as long as we stay below this resistance. So this is the resistance I'm talking about. The prior high of March, that's about 105.88. As long as the dollar remains below that blue line, I still think we're in a downtrend in the dollar. And I think this breakout above the trend line is a likely false break. That's my higher probability. However, here's how we can get an extra degree of confirmation or probability. So if I'm right that this rally in the dollar, which is again overextended and overbought, if I'm right about this, what the dollar needs to do is to break down below support. And you guessed it, in case you're thinking, where is the support? Well, you can see I've labeled it here. The key support is 102.9. Let's just say 103. Keep it simple. So 103.5 is the near support. We need to get below that to show to us that a likely top is forming here. But I want to see further confirmation by breaking down below 103 or 102.93. If the dollar can break down below both these levels, the US dollar, let me just get my pen. If the dollar can break down below both these levels, 103.5 to 103 or 102.93, then very likely the odds increase that a top has been forming or top is forming currently in the dollar. But let me just say, we need confirmation. That has not happened yet. Even though I think that's the most likely scenario, I want to wait for confirmation. So I'm going to urge caution at this moment in time. We need to be cautious because there is no indication as yet this price is topped here. Okay, so as long as the dollar can stay below this important resistance, let me just bring this back a little bit so we can see it again. The dollar has to stay ideally below the March highs, this level that I mentioned at 105.88, has to stay below that and break down below support 103.5 to 103 to indicate that a top is in for the dollar. And that I think is the most likely scenario, to break down below the support that we're seeing here. And that would indicate, so a breakdown below 103 would indicate that a top is in for the dollar. And this is an ABC correction. Okay. So the next pullback, what I'm saying is the next pullback in the dollar and the next pullback in the euro is going to be very important. That's what we have to wait for. As long as that particular pullback is impulsive and breaks down below support, like for example the dollar on 103.5 or 103, that would confirm my view that we're in a downtrend in the dollar, or a downtrend continuation in the dollar, and an uptrend continuation for the euro if it breaks above resistance. Okay, that's really what I have, and that's what I think is the most likely scenario, provided the dollar does not break above 105.88. If the dollar breaks above this resistance at the March highs, I may have to change my mind, because that would mean I'm probably wrong on my bearish analysis of the dollar. Okay, so it needs to stay ideally, but it needs to stay ideally below the March highs to confirm my bearish analysis, the long-term bearish view on the dollar. By the way, if the dollar does break down, if the dollar does indeed break down below the support region that I mentioned, below 103.5 to 103, so break down below the support region here would be bullish for metals like gold and silver, and bullish also for the euro, obviously, bullish also for the pound, and perhaps even for the stock market as well. But bottom line is that the fact is that as far as the dollar is concerned, we need to be cautious here, because I don't think the dollar has reversed trend, personally. I think this is a false break. It's an ABC correction. And all I'm waiting for is confirmation. Let's see if we get confirmation below support, about 103, to confirm my view and analysis on the dollar. We shall see. All right, guys, that's what I have here on the charts. Thank you very much indeed. Look forward to seeing you in the next video update. Bye for now.